Hello, my name is Mike Sinabaldi and welcome to this week's video edition of Heard on the Street. In this edition, I'm going to take a look at the following markets: the Emini SP, soybeans, copper, and the Euro-US dollar pair. Before I begin, it's almost time to update my long-term forecast for the US, European, and Asian indices, currencies, metal, and energy markets. You might want to review the forecasts made in December of 2010 before my next update scheduled in late August to familiarize yourself with the larger trends. You can find that forecast at this URL. Today the world finds itself at a crossroad of immense proportions. Huge changes are coming in the near future, whether we're ready for them or not. Many investors cling to the false hopes that the economic storm is over and that their battered portfolios will recover from a decade of lost returns. Is what we witnessed in 2007 only just the beginning, or is a recovery at hand? Is the market setting up for a horrible trap for investors? Let's take a look. The first market that I'm going to take a look at is the Emini SP. What does this chart tell you? It tells you that the market is consolidating or coiling, storing a lot of energy. A big move is customary after such action. With respect to establishing a wave count to explain the most recent price action, the water is too murky to have a high degree of confidence in either direction. There are several implications, each having its own flaws. I suspect that many readers will be working a running flat correction as shown for wave 4. This is plausible, but on further inspection, I think not. Look at the gray highlighted boxes, and then look at the time relationship between wave 2 and wave 4. Typically, wave 2 and wave 4 relate in a time relationship by 0.382 to 0.618. However, they relate in a 0.125 relationship where wave 2 equals a 0.125 multiple of wave 4, 12 bars versus 90 bars. Therefore, one should at least be suspect of this interpretation. Secondly, wave 2 and wave 4 should not exhibit an equality relationship in price. They should also relate by 0.382 or 0.618 multiples. Sticking with this count also presents another obstacle. The BC leg is 32 bars, and wave C should be completely retraced in less time than it took to form if the market is acting impulsively. As such, August 2nd is the deadline for a complete retracement of wave C, or the pattern will have another flaw. Regardless of these flaws, the key levels to watch are 1293.75 and 1352.75. Prints below 1293.75 create wave overlap where wave 4 enters the territory of wave 1, thus violating an Elliott rule and negates the running flat interpretation. If price cannot overcome 1352.75 within the allotted time of August 2nd or at all, then the running flat is also negated. Another interpretation not shown is the running triangle. This was one of my original interpretations beginning at the wave B crest, but I gave it up as the depth of the wave C decline was too deep. Maybe I'm wrong, and this is what's unfolding. However, at a minimum, the same time relationship flaws would exist and actually get worse as the pattern develops. I'll discuss this further if warranted. Without a high probability count, that brings me to what I really want to discuss, that being, will history repeat itself? I'm going to show fractals of both the Dow and the S&P so you can see the similarities between the current price structure and what has occurred in the past. Will history repeat? A 2007 and 2011 analogy. At the weekly chart level, I've compared 2007 and 2011 price action. Note the highlighted boxes each took 20 weeks and retraced 0.618 and 0.786 respectively. If history is repeating, we should rally this week as we did here. 1352.75 will be tested and fail and the market should fall on its own weight. Will this coincide with the U.S. debt debates and a vote not to raise the debt ceiling? I don't know, but it would be fitting. Should this play out, Katie bar the door, I'll be looking to get short against 1252.75. I've also found a fractal in the Dow. At the quarterly chart level, this is the current count and the anticipated market outcome. In beautiful pictures, Bob Prechter provides a mountain of data supporting that 2000 was the top of Wave 3 circle. Here's the previous chart without the current forecast. Note the highlighted boxes. Each corrective pattern took approximately 9 years. So if history is repeating itself after a lost decade of negative returns, then the market will reach a new recovery high, as it did here, and then make a significant decline, as it did here, before rallying to new all-time highs. Which scenario plays out is uncertain, but as I stated earlier in this video, a big move is on the way. The next market that I'll cover is soybeans. At the weekly chart level, the Wave 4 triangle interpretation is progressing nicely since the June 26 call. Wave D appears to be very mature, but another pop may be needed to complete the structure. When complete, expect Wave E to approximately 1325 to complete Wave 4. Thereafter, my anticipated preliminary target is 1529. The next market that I'll cover is copper. At the weekly chart level, this is the interpretation that I last left you with, where Wave 3 circle had completed. Based upon the current price action, the alternative count may be more appropriate. Should 453.30 be exceeded, I will adopt the alternative count. And at the daily chart level, this would be my interpretation should the alternate count be necessary on a break of 453.30. The final market that I'll cover in this week's edition of Heard on the Street is the Euro-US dollar pair. At the weekly chart level, this is the last chart that I left readers with. While prices have declined, they have done so in less than optimal form, bringing the count into question. Looking at the daily chart level, if the market is working a pair of 1-2s to the downside, then this market has to fall on itself right now. The lower boundary of the channel should be broken decisively. If both these requirements are not met, then odds are that the market is forming a complex correction, which I'll address as soon as necessary. I hope you found this video helpful, and best of trading.